NIO stock predictions for August 2022. Analysts warn about fraud. NIO intends to compete in the rapidly growing market for electric vehicles. The electric vehicle, or EV startup, presented its newest electric SUV, which has the potential to compete with Tesla's Model Y. But the competition is heating up. Is it a good time to buy NIO stock right now? Do the stock's recent declines make it more appealing to investors, or should investors be aware of more fundamental issues that need to be addressed? In this video, we'll take a look at the recent performance of NIO, as well as the factors that are influencing the price prediction of NIO stock for August 2022 and beyond. Hey guys, welcome to Finance Insights, where in today's video, we'll tell you about the analytical prediction of NIO stock for August. So stay with us till the end of the video so you don't miss out on any of this information. And before we proceed, don't forget to subscribe to our channel and click on the bell symbol so you never miss out on any of our wonderful videos in the future. And let's get started. NIO, which was established in 2014 and has since delivered booming sales, is sometimes referred to as the Tesla of China. Like Tesla, NIO makes luxury EVs. NIO, in contrast to Tesla, does not produce its own electric vehicles, but rather works in conjunction with a state-owned auto manufacturer. China is the market for electric vehicles that's growing the quickest, and NIO, XPeng, and Li Auto are startups that compete with Tesla there. Additionally, they contend with the domestic EV and battery giant BYD, as well as the increasingly formidable German automobile manufacturer Volkswagen. Now let's take a look at the most recent position of NIO. Volkswagen's global sales of electric vehicles increased by 27% during the first half of the year 2022. The company announced on July 15th that sales of all electric vehicles had more than tripled to 63,500 units, with China serving as the primary driver of growth. Only considering sales in China, Volkswagen was able to surpass NIO, which delivered 50,827 electric vehicles in the first half of this year. Despite the disruptions caused by chips and other factors related to COVID, both companies increased their sales. Once considered to be behind the times in terms of electrification, the German auto giant is now emerging as one of the leading producers of electric vehicles, although it's still behind Tesla and BYD. Volkswagen plans to achieve its goal of doubling its electric vehicle sales in China by the end of the year, riding the wave of demand for its new ID.4 electric SUVs. NIO introduced the ES7, a highly advanced electric vehicle, on June 15th. This vehicle can accelerate from 0 to 60 miles per hour in fewer than 4 seconds. NIO calls the ES7 its fastest SUV to date, and industry observers anticipate it will compete against the Tesla Model Y and other electric SUVs. On the earnings call that took place on June 9th for NIO, management reportedly discussed plans for a mass-market electric vehicle in 2024. It has been rumored for a long time that the affordable NIO sub-brand will expand the company's addressable market, which will drive growth. The Chinese manufacturer of electric vehicles has also stated that it'll begin producing its own battery packs beginning in 2024. There is some technical analysis of the NIO stock market. After a surge of 25% in June, the price of NIO stock that is listed in the United States leveled off a bit in July. The management initially disregarded the short seller's allegations that the company had inflated its revenue from the sale of batteries. The following day, July 11th, the company issued a statement announcing that it would establish a separate committee to investigate the allegations. NIO stock's currently retesting the 10-week moving average after the recent pullback in price. After falling for much of the year due to concerns about the United States delisting companies and China's COVID lockdowns, the once-hot EV stock is still trading at a significant discount to its 200-day moving average and is more than 57% below its 52-week high. As a consequence of this, the relative strength line for NIO stock is lower than it should be, even during a volatile market correction. It staged a strong comeback throughout most of the year 2020. If the RS line is moving higher, this indicates that a stock is performing better than the S&P 500 index. In the chart that was presented, it's the blue line. The IBD composite rating for the shares is below average at 25 out of 99. The score is derived from a combination of important fundamental and technical metrics into a single total. And an RS rating of 31 indicates that NIO stock has only outperformed 31% of all the stocks that are included in the IBD database over the course of the past year. The heavy buying by large investors over the course of the past 13 weeks is reflected in NIO's accumulation distribution rating of A. As of the end of June, there were 878 funds that owned shares. According to the data provided by the IBD Stock Checkup tool, NIO stock's not seen any consecutive quarters of increased fund ownership. Now the question is, what are the earnings of NIO and a fundamental analysis of the company? NIO lags behind its competitors when it comes to key earnings and other fundamental metrics. The company's still searching for a way to make a profit despite its youth and rapid expansion. The EPS rating for NIO stock is quite low, coming in at 8 out of 99. A company's earnings growth is compared to the earnings growth of other companies using the EPS rating. On a scale where A is the best and E is the worst, NIO's earned an SMR rating of D. The increase in a company's sales, as well as its profit margins and return on equity, are all factored into the SMR rating. NIO announced on June 9th that it had significantly reduced its net losses for the first quarter, exceeding analysts' expectations. Revenue increased by 24%, just missing expectations, while EV deliveries increased by 28.5%. However, the EV delivery guidance for the current quarter was disappointing, which resulted in a flurry of analysts lowering their price targets for NIO stock. Despite this, the electric vehicle manufacturer reported an increase in both production and delivery since the beginning of June. Despite the volatilities of supply chain and the challenges in vehicle delivery resulting from the recent resurgence of COVID-19, we witnessed robust demand, NIO CEO William Ben Lee said in an earnings news release on June 9th. The release was for the company's most recent quarter's earnings. In all of 2022, analysts polled by FactSet expect NIO to more than double losses to 63 cents per share. It's anticipated that there will be a 59% increase for revenue for the year. They forecast that NIO will significantly cut losses to 23 cents per share in 2023, when revenue will have grown by 72% thanks to the launch of new electric vehicles and an easing of chip headwinds. NIO's electric vehicle sales more than doubled in 2021, despite the difficulties caused by the pandemic. There are currently 35 analysts covering NIO stock, and of those, 33 have a buy rating, while only 2 have a hold rating. According to FactSet, nobody has a selling rating. Is it time to invest in NIO? After worries about debt and liquidity caused by shares to drop, NIO's financial condition is gradually getting better from a fundamental point of view. It's reduced losses while simultaneously achieving substantial gains in revenue. The introduction of new electric cars and continued globalization both mean that there is more room for growth. However, the electric vehicle wars are heating up as Volkswagen has outsold NIO in China so far this year. After the chip crisis, the availability of battery supplies may pose an even greater challenge to the EV stock market as a whole. However, NIO's plans to enter the battery business may provide some protection against this risk. After taking a beating because of concerns about being delisted in the United States and China's COVID being shut down, NIO stock is looking at a long road to recovery. The stock of NIO should not be purchased at this time. And that's it for today's video, guys. We sincerely hope you enjoyed it. If you did, please make sure you click the like button and share it with all your friends and family. And if you have any further questions or comments for us, please share them with us in the comment space below. And don't forget to subscribe to our YouTube channel, where you'll see even more of our incredible videos. And you can check out our other videos that have been specially selected just for you. Hey, we'll catch up with you in our next video. Thank you for watching.